Good evening. This is the Elliott Wave update for the S&P 500 for Sunday, November 7, 2021. The started Globex saw that both the S&P and the NASDAQ gapped lower on the news that Elon Musk put out a little poll via Twitter and asked his Twitter followers if he should sell a portion of his Tesla holdings. And I believe that the answer was a resounding, yeah, you should. And so that he has vowed to do that now by the will of his Twitter followers, and has agreed that he will, that they will favor that he will sell 10% of his Tesla holdings. So they gap lower. But on the other side of that coin, we have that the Congress has finally passed the first side of the infrastructure bill, which puts a lot of money into roads and bridges and charging stations and infrastructure. The United States infrastructure, which is very, very sorely needed and undoubtedly will create many jobs across the country. So there's that balancing act going on. So they have come back in and they're buying it back up. The initial drop was down to, well, let me see, 46.78 is where it got to, and now it's already 10 bucks higher. And the deal is, it's like, how much play will that have on the economy? And if we get to a full employment or better employment, how positive is that for the overall economy? And actually, I think that it is more positive than people think, but it's positive in a way that it also creates inflation. So inflation is not our friend. So, and inflation kind of hurts all the hard-earned money that you might get, or by higher earnings or by having constant income, because everything else is going up with you. So in any case, it's going to be a kind of a two-edged sword. And we're going to have to see how the market wants to deal with all of that. First up, the way that I'm interpreting it, though, on an Elliott Wave basis, because again, remember that Elliott Wave really does not take fundamentals or the news or other things into how it figures what a wave count is, or in particular, what wave count we're having. Are we in a bull market, a bear market, et cetera? And it is really purely on behavioral, emotional, behavioral, that's very trackable and is chartable. And so we're basically just going through those cycles, and we've been in the process of completing a very long-term bullish or bull market that on several degree levels has been in force for the last 90 years. So it's a lot of ground that is now up to be corrected. And initially, as I have been talking, I would go, let me go back out to at least the weekly chart here in the S&P. And the weekly chart, it's really, I'm thinking we correct all of this move, everything we have done off of the March 2020 lows. And the S&P, I put in a low at 2174 back in March of 2020, and now has rallied to a high above 4,700. So it's risen quite a bit. And I think that's what will be corrected initially. Now, if we are done with this internal C wave, and remember that the way that I'm counting it, that the market has reached its ultimate high for all of those advancing sequences here, and that we have started the correction and we've come down in an intermediate A wave, and that this is an intermediate B, which includes a very nasty but persistent rally up to 40. So come on, let me just push this open and I can get it for you. There it is. 47.11, almost 47.12. And that was on Friday, just coming into the opening. So, and you can see that that level was pretty well rejected. And then the market just basically traded down and then lower. pretty much until the close, popped up a little bit on that close. And so what the market could be telling us is that A, it's finished, and B, we're getting ready to start our next little leg down. But again, I need to, on an hourly basis, be able to count 5 waves down, not even close. So if I drop it, I think down to a 15-minute, it's going to put us into a little bit different space where we can take a look at that. And we can see even on a 15-minute basis, it's not really a complete, because the selling got pretty heavy mid-afternoon. And so we dropped real quick, but then they bought it back because it was an expiration. So what we will get from here is going to be more interesting. So if anything, possibly 1, 2, and now we're starting into what we might visualize or see as the beginning of a 3rd wave down. But way, way, way too early. We have opposing forces. If Tesla drops quickly tomorrow, then yes, the S&P will, along with the NASDAQ, drop. But if it has the opposing forces of a lot of being pulled up in a lot of stocks or corporations that are going to benefit from the infrastructure package, well, that could benefit the stock, and including Tesla. But it could benefit the EX. I mean, Tesla, it's an electric car vehicle. One of the things they're going to be doing is rebuilding all these charge stations. So it's just going to be bizarre how people will interpret that for the now versus you're buying something that's way out there in the future. So again, a lot of things have to be balanced out in investors' minds and traders' minds, et cetera, on what can cause this market to go up and down and still maintain the volatility that's been really injected back into this market. And by Elon Musk making his noise can just add to that volatility. As people decide, I'm getting out, boom, you saw how that opening went. It just kind of dropped, and it dropped very quickly. But then they stepped back in just as quickly. So anybody's guess, but right now, I'm going to continue to count as if we have completed it. I'm leaving open that potential though, because this would be the next level. This is where they'll come back to. They will go above that high, and that's the next resistance at 47.34. So really it goes from 47.30, and I would say you can go all the way to 47.35 to 47.40. Above that, we have 47.56. So you basically can say 47.50 to 47.60. So you give yourself a zone that this thing can go into. But those will be pretty high levels. And we're getting back up into levels that really aren't associated with the type of wave that would be in progress. It still has to be a part of this 5th wave. That's the 4. I'm putting the 5th in because we're already down below what I would be counting as wave 1. This is wave 1 of the 2. I'm going to go back out to that hourly chart, and then I can show you them, because I was looking at that earlier and I thought, well, I'm putting the 5 and the C up there because I'm feeling that it has turned and violated a level that it shouldn't. And that's this. This is wave 1. Wave 4 came down and basically broke just below. Or this, if it had, this would have to be a wave 4. But this 5 is not done yet. This would have to be a little internal wave 4, and that's wave 1 for this internal wave. So I would think that the 5 belongs there and then the C above it. But stranger things have happened, and that's why I will leave open the potential. I'm not going to give it a big high probability scale, because remember, a lot of this has been a short squeeze. A lot of this has just been a folly on what they're running these things up on, particularly the bigger stocks. I mean, Tesla was obviously to me, others might disagree, but to me, it was obvious it was a short squeeze. I believe there was a short squeeze that took place in Amazon on Friday, but they're still going to try to bail it up. It's not as high as it was where it closed. It closed about 3,500. I think Apple got pretty high up. Again, I think it was due to the expiration. So we just need to sit and wait and see what the market tells us. So downside, we broke below the 20 on the opening, quickly took it back, and now sit on the verge of going green on the S&P, being up. Now, still lots of time before we show back up tomorrow morning for the opening to see where the markets are, but we need to allow for upside. Downside would be that it comes down, and when it breaks 46.74, then it's pretty much going to be a square shot down to the 50-day moving average, the hourly 50, and that's at 46.69. If it breaks there, the next support is 46.52, then 639. But ultimately, you're going to be looking for a move down to 46.12, which is where the 200s is. So each time it breaks, it is showing on the hourly or on the daily, wherever you're coming from, that the market is. So it has to close, it has to move below and close on an hourly basis. That's all it has to do. It has not done that below the 20. It has not closed below the 20 on an hourly basis. So that's why this bar is green. So we need to wait. We need to allow these things to happen, because we have scenarios where the market can just continue to go up. So same deal. If it comes down and it breaks below the 50, but manages to go up back above it before the bar closes, that is not a clean break of the 50. So a clean break below the 50 with the market, with the bar closing below the 50, then it's going to show weakness. Then we're demonstrating weakness in the market. And that's how I would play it from going from there. Upside, same deal. Okay, so I'm going to leave it like that. We are maybe be in the beginning stages of the highs being in for the B wave. I haven't put it there because that'll allow for additional upside. But thus far, I've gotten 5 in a C, and we'll see what happens with that. They may be transferred and see what the market wants to do tomorrow. And that's how I'm going to leave it for right now. The next update will be on Monday, the 8th.